You're listening to The Practical Wealth Show with Curtis May.
All right, guys. Hey, welcome to another episode of The Practical Wealth Show. I have a privilege to interview, and this is the second time on the Practical Wealth Show, but it's been a while. And so if you don't talk to this guy for 90 days, he's as bad as me in terms of learning new stuff, right? So Mr. Kamil Salter, we're going to have a discussion because I've been getting questions about this. And I don't know anything about it. Okay, so we're all going to be learning. So get your notepads out. But our conversation is going to be about crypto. I won't say Bitcoin because that's just one of 1,200 cryptocurrencies. And so Kamil has a new course out we'll talk about towards the end. He's a serial entrepreneur. He's a brick and mortar franchise business owner. He owns real estate. And so we were just talking before we recorded. It's not one of anything. He's among diversified through different asset classes with his emphasis on cash flow. And here's the really cool thing. So he's kind of like me in the sense that we both have entrepreneurial parents. And that I think that I want to speak to that I think that helped. We were just saying that it says dad gave him at graduation from college, Rich Dad's Guide to Investing, right? And just went back through it 20 years later, right? And after being a really successful young businessman. So Kamil, welcome back to the Practical Wealth Show.
Thank you, Curtis. It's great to be back. And, people won't know that we've already been talking for 2 hours.
All right. And that's short for us, right?
Right.
We had like 4-hour sessions, we're like, and he's a tax business, one of his tax office just hanging out like 2 weeks in a row, 2 or 3 weeks. But that's fun. Like we did talk offline, and we could probably talk for another 2 hours. We're not on this podcast, but I missed our conversation. So I will definitely offline reach out more often, at least once a month. We have to have a conversation.
Definitely.
But tell them what I didn't tell them, and let's kind of get into your favorite topic, one of your favorite topics, which is cryptocurrency.
Well, tell them is what I'm just like as far as what just about crypto, business, like my philosophy.
Just your business. So tell me a little about your background.
So
and then your business, and then move on to crypto.
Background is accounting, real estate. Graduated from college 2021. Went to was 2001.
Yeah.
I went into corporate America. Only lasted there about 2 years. Since then, I've kind of been quasi on my own. My family come from a bunch of entrepreneurs. My grandfather at one point owned a number of nursing homes in the city of Philadelphia, senior citizen homes that my mother's not own through nonprofits. My mother still actually runs those businesses. My dad had, I don't know if people are familiar with a Docks. He had a Docks franchise. He had a pretzel stand at the airport, which at the time I was on one of my first jobs, and he made a lot of money for that. He used to buy tons of real estate back in the day for like $5,000 of property, just buying property left and right. And all while working a full-time job, he was head off. So I've come from entrepreneurs. A lot of my immediate family are entrepreneurs. And so I've had an opportunity to, just, I guess, live that lifestyle, but also see the pros and cons, see ways like their strengths, their weaknesses, and how I can kind of manipulate those different things into how I'm operating, and also just growing from just the life and the world that we're in, and just learn my own experiences, my own network. Actually came across Curtis when I was younger, like 21. We didn't know each other, but I knew of him. He was on stage in a multi-level marketing company that eventually I did wind up getting on stage, but Curtis had already left. He had moved on. It wasn't enough money for him. But so, fast forward 2008, I became a Liberty Tax franchisee. Just finished our 11th tax season. We went from one store to 5 stores now. Since we had 5 stores since 2016, I've been through a lot of just this business. The tax business is a very interesting business model because, you have to generate basically the majority of your money in about 3 or 4 weeks. And if you don't do that, you got to wait another year. So just kind of trying to master that whole thing and develop systems within a system. And, being in a business where, we are fortunate enough to be able to double the average revenue of the average Liberty Tax store, where our stores are able to double that and just kind of operate at our own pace and our own strategies, and still working within the corporate system, but just kind of modifying it to be as beneficial to us as possible. And so, but I say all that to say, like, I was in because of the time and effort that goes into the tax, but it's like I couldn't really take on a lot of different opportunities, like, because I knew I had to be available for tax season. Well, fast forward to 2017, crypto was introduced to me, and FOMO got me into a fear of missing out, actually got me into crypto. I mean, I saw a particular cryptocurrency coin go from less than a penny, like I want to say 0.006 cents. So it wasn't even a penny in December of 2016 to by March of 2017, that one coin went to 6 cents. So I was like, and I had been hesitating the whole time, but FOMO just got me at that point. And so since then I've been learning, I've been growing, I've been, as a part of my daily life as far as cryptocurrency, learning, researching, implementing different strategies, and the things I've learned from crypto have now been able to translate to business. Some of the to my tax business, some of the tools and things we use in crypto, I now use in my tax business. Getting into stocks and options, being able to, like, crypto is more technically so more technical analysis, which is looking at charts and stuff like that, versus stocks is more fundamental. But there's a combination that meets in the stock world. So being able to really take some of my crypto technical analysis and implement it as a fundamental analysis, and kind of been able to participate and learn more about stocks. We're now just having exposure to way more asset class and just general understanding of more macroeconomics and
right.
And, understanding where I want to fit and how, I tell people all the time, like, it's not about, you can make money all types of different ways, a lot of different opportunities out there in so many different spaces. But, now as an older person, well, not older, but I'm not in my 20s anymore. So, right. Time is in every decision, like the time aspect is in every decision. So it's not like how much money and how much time is going to cost me. So I have to figure out ways, systems and strategies to, try to make money with the least amount of, or make money, not try to make money with the least amount of time, to keep compounding everything else that's going on. Like, stuff I've done in my 20s, I'm still able to participate off of as far as cash flow, stuff in my 30s, but still able to participate in cash flow and it's only after so many times you keep compounding different things that you've done that you're going to be, where you want to go financially. Like, I had a definition that we encourage you to. I had a definition of that, being financially independent is having your passive income exceed your monthly bills. And Curtis retrained my philosophy or improved my philosophy and said, no, having double the amount of 2 times your, what is it?
Passive income twice as your expenses.
Twice. So there you go. Like, even so that just changed my mindset. But so, how it got into the crypto course is just,
and there's good debt and bad debt, right?
Oh, and there's good debt.
I've been working on for an hour on not worrying about paying the debt off.
Yeah, I don't have, what do you say?
You're not in debt. You have debt.
I have debt. Like, just struggling. Like, I'm still struggling with it. But so with that being said, like, one of the things that, like, one of the mind shifts that I've had this year, which Curtis, I know, has been speaking to this for a long time, is like, so, if I have debt, not in debt, but if I have some debt and I do want to get rid of it, but I have cash on the other side, so I got the asset and liability. Well, in my mind, the perceived liability. Well, how do I keep because I've done this in the past where I took the cash and paid off the debt, but then I don't have the cash. Well, now I don't want to do that. I want to take it to the next level. So I want to keep the cash, use the cash to generate more income, pay off the debt. So when it's all said, like, I still got the cash and I have the no debt and and increased cash flow, but I still have the cash available, the original cash that now I can use to use elsewhere in other compounding strategies.
Yeah. And see, so let me jump in there, because so what happens is, what you just heard is, you look at our YouTube channel, we talked about the accumulation theory versus the velocity method, right? So Kamil is generating velocity, cash flow from the asset classes. And so let's go back to cryptos for a second. So wait, you didn't just hear about a hot tip and decide you want to buy it and you don't know anything about it. That's, because this is how people tell me they get crypto. They're doing it through a networking opportunity, not throwing shade at that, well, maybe a little, or they just heard it was going up, so let me buy some. And because what do we talk about? Investing is about becoming something, right? So you can hear that he has become an expert. You're about to hear it if you don't hear it yet. You should hear some of it now, but it's about becoming certain, because we both are voracious readers you got to invest in your number one asset is you, right? And you've got to invest in what? Your mindset, which he does, your skill set. Didn't you go to like Iceland or something for some
I went to not Iceland. What was the other place? Amsterdam. Went to Amsterdam last summer, and just to like so when you asked me, was I one of the people that I got FOMO got me in, so I didn't really know too much about it, but I got in. But when I got in, I realized I didn't know a lot. So one of my first things I did was buy a course, and that course introduced me to a group of people who I've been involved with since then, May 2017. So I've been learning from them. But last year every year they've had something, and I just didn't have the time, or just like 2018, I think they were like doing their thing in February, which is like mid-tax season. I couldn't do it, but when they announced it came out when they were going to do it in 2019, I was like, oh, I'll be there, So it was in Amsterdam. Went out to Amsterdam, had opportunity to meet these guys in person, and just even though it was stuff I'd already been learning and stuff, it was just different having an in-person experience, and then just really, I don't know, like 3 days of just knowledge, I guess.
Immersion yourself in the mindset, skill set, network, right? And it's different in person over here or whatever, and just talking, all the little sidebar. It's like, because we've been to events, it's like it's the meeting after the meeting, right?
Right.
Where you get a lot of
so got a lot of just information, and then and then also changing my mindset, changing my strategies about how I'm approaching it. So it's not like, yes, I'm playing a market cycle in the cryptocurrency space where it's like,
So wait, let's back up. Let me go back to the beginning. He's got an early show. We're going to link to this. So tell them, let's go back to a beginner. What is cryptocurrency?
Bitcoin is probably the majority. It's like 65-70% of the value of the cryptocurrency market space. And Bitcoin is right now, it was created to be like an alternative currency, but because of the technology and the framework of how it was made, like it was made anonymously. So the people that actually work on it now are they volunteer developers. And so it's a digital asset that was supposed to be currency, but doesn't have the velocity that a lot of payment processors have, as far as like being able to do like thousands of transactions per second and so on and so forth, and the cost to move it around. So with that being said, it fluctuates so much in value. Like, people don't want to, you can't use, if I paid you in Bitcoin today and it was $1, but tomorrow it's worth 50 cents. Well, you don't want to be.
That was my thing, because he kept saying it's just going to sell for $1. I says, and it was going to be currency. And so my problem was, okay, it's not money till I want to be paid in it. And it's too volatile in my mind to act as money, because money is supposed to be a store of value. So that's good. So you clear that up. Keep going.
But now, I mean, it's more like it is a store of value, because it's a hedge against the dollar. It's a hedge against, the world's economics or our financial system, and that.
Yes. So there's a hedge. Yes.
So Bitcoin has scarcity. There will once, like you mine, like Bitcoins are mined or created through like a mathematical algorithm that computers all across the world participate in through nodes and blockchain. Well, once there will only be a certain amount of Bitcoin mined. It is 21 million. I forget the exact date that'll be, but once there's 21 million Bitcoin mined, that's it. There's no more. So you add the scarcity principle to that. Then also every 4 years, the amount of Bitcoin being produced gets halved. So the last halving was this past May, I think May 12th. The one before that was like in June of 2016. And historically, after a halving, within about 12, 18 months, Bitcoin goes on a bull run, then the cycle plays out every 4 years. But so by having the scarcity principle, and then look at what happened in March, and what's going to happen, will most likely happen again with, the Fed, or once the next stimulus package goes, there'll be more money printed out. So your dollar is losing money, but here you have a scarce asset that there'll be less produced, and it's a finite asset. So it won't be any more than that. So my thing is, like, even if I'm not like trying to like speculate, trade, and like whatever, if I'm just hedging my portfolio, my investment portfolio against a certain against uncertainty in other world events, but I know I have scarcity here. And then, so some people say, well, how do you know it has value, or what is value? Well, value is just perception. Like nothing really, the value that something has is what we give it by honoring that it has value, or by putting, I guess, our money up behind it. And the fact that somebody is willing to pay $10,000, $11,000 for Bitcoin and spend billions of dollars every day on it means that there's value in it. And
Yeah.
so, that's just where I'm at with it. So even if I'm not like in the space and making money from the space, but just having a hedge against, financial
Right.
distress and our economy.
So, and let me just hedges, think insurance, right? So
Right.
playing defense wins championships. So what he's saying, because if they're printing money, that is inflation. And so inflation is if they print more, you make the value of the monetary units in existence worth less dollars. And so if you hedge it with Bitcoin, since it's finite, you can't really do that, like, because you can't print it, governments can't produce it, and the goal of it was to kind of have a way to handle money that was deregulated outside of the monopoly that the Fed and other world banks were creating.
Yeah, true.
That was, kind of the original behind that. But what you do from our conversations is you don't just buy it. You do just buy it. But one of the things he says, he does a lot of, and he's got a course on this, but technical analysis. So you look at the crypto world differently than most people. Like, most people think I'm going to get some crypto, but that's not what you do. Explain to them your kind of philosophy with the industry, the market.
Well, there's multiple things that could be done in the crypto space, but so one of the things I like to do is like have, like I'm playing a long-term game, but also I want to have guaranteed income or consistent income. So there's a number of different ways in the crypto space where you can basically park your cryptocurrencies and get rewarded cryptocurrencies at a certain rate, which you're now allows you to compound your positions and, turn that into money. So say you can get a crypto position and it pays you $300-400 a month. Well, that's like buying a property, but the difference is there's no cost after the initial cost. There's no real estate taxes, there's no insurance, there's no repairs, there's no none of that. It's just the only thing you do have to worry about. I mean, the asset can fluctuate in value, but that's why there's nothing's guaranteed, but hopefully you are participating in a coin that is has a lot of liquidity in it. But then also, so trading, like I have a certain capital bucket of my crypto portfolio that's set aside for trading, where you're reading charts, and that is a skill in itself. And when I got in, I didn't even know that was a thing, but just put more time in and kind of being able to read charts and develop different strategies that work for me. Where also, like when I first got in, I'm like sitting in front of charts like all the time, but now kind of just switching up how I'm operating and using more tools to help me be more profitable with less time of my personal time involved with sitting in front of charts and things like that. But doing that, developing a bucket, developing different strategies inside of how I'm going to approach technical analysis, playing macroeconomics, what's going on in the world, making sure I don't have all my money in any crypto at one given time, making sure so I have money set aside to take advantage of washouts and dumps in prices and stuff like that. Because because of the volatility, there's a lot of bounces. So you can, if I have money set aside in a certain portfolio for that, well, if a washout happens, then I can participate and, basically get 20, 40, 50% return on my investment within.
So stop. What's a washout?
So say a washout is March when COVID happened to the world and everything dumped. And so on that day, Bitcoin dropped 40% in value. So it went from over a 3 or 4 day period, it went from 10 to 12,000 to 3,800. So if you had all your money in Bitcoin at that time, then your Bitcoin went from 12 to 3,800. But if you had money sitting on the sideline, now you have the opportunity to get a Black Friday sale. You're buying on at that opportunity. And then since COVID, Bitcoin has gone back up. So if you had Bitcoin holdings, your cash that was available for washout, just sitting there, just specifically for that, allows you to now participate in the Black Friday sale. And then once you buy it on discount, time goes on, historically Bitcoin goes up. I mean, it does have its hiccups and it falls back, but it always is honey badger, just keeps going. So, you are just playing that particular, that strategy. So, I mean,
you have liquidity outside of that is what you're saying. We always go back to where do you store your cash? He's got liquidity. So if it's a sale on, you want to have the liquidity to go buy it, to take advantage of it. if your philosophy, long-term philosophy, believes that's just going to go up, then why wouldn't you buy more at a discount?
I mean, so that's a trading. I mean, not everybody wants to be a trader.
So
or
define
whatever, but then,
trading. Just I want to make sure that they don't take for granted. I know what it is. I want you to tell them what trading is, because that's different. And most people don't know how to do that, and not where you can do that with cryptos.
Well, there's different exchanges that allow you to trade cryptocurrencies where you can, you're putting cash onto this exchange, and now you looking at charts and you're speculating off of, is it the price going to, buying low, sell high, or sell high to buy low? If you're shorting, whatever, you're trading the markets, which is a 24/7 worldwide market that never closes, is always on the go. Okay. And you are just positioning yourself to try to take advantage of that. So that's trading is trading. I mean, it's not for everybody. It's not everybody wants to do it, but we're just talking about like hedging. We're seeing a lot. It's like a current trend recently, over the last few months, where you have a lot of Fortune 500 companies are now taking their money and using Bitcoin as a treasury asset. So
really, okay,
a couple weeks. Well, last week you had Square, which is probably the most known company, that did 50 million, took 50 million, and then came out and said that Bitcoin is aligns with our company's philosophy and approach of what we believe is currency and worldwide transactions, blah blah blah. Then you had a company, MicroStrategy, a month or so ago. They took 450 million and said all our reserve currency is going Bitcoin. You had a company, I think yesterday, the day before, they did like 10 billion. Then you have the Grayscale Investment Trust. I mean, I'll give you the link. It's like bitcointreasuries.org. You can see all the companies that are doing it. The list keeps growing. Mm-hmm. But Grayscale Investment Trust, they have a strategy where they're just buying as much as possible. Like right now, I think they own about 3% of the whole Bitcoin supply. Their portfolio, I think, is up 147% this year on Bitcoin. I was reading that the other day. But so they're just buying. They just buy, because they see the value or the rules of Bitcoin, like the social contracts and just how it's designed. Like it's a currency that's uncontrollable. Like nobody owns it. There's no government that can come in and say, and stop it. You can't you can't go to a company and be like, shut this down. Like it's just in the wild. And it's like I said, it's a hedge. So then you have Fidelity a couple days ago come out and say, we feel like you should have at least 5% of your portfolio into Bitcoin.
Really?
So,
okay.
I'm not the smartest guy in the world, but you got all these companies where they have access to way more capital than I did. They're in charge of way more capital than me. But if they're hedging more of their investments into this space, it's like, well, I should be doing more of that as well. So that's kind of where I like the hedge. And it's just getting more and more credibility from all these companies coming out and saying like, we're doing this. And even Coinbase is like the main onboarding ramp for Americans into the crypto space to get started with crypto. They've been around for some time now, and if I'm not mistaken, one of their early investors is Goldman Sachs. So wow. I mean, the money's, people are in the game, and the big money's in the game, and it's coming, and it's like the whole market cap of cryptocurrency is still, so cryptocurrency, you have Bitcoin, and everything else outside of Bitcoin is altcoin. And at this point, there's like over 5,000 different altcoins, but combined, that makes it the cryptocurrency.
It's funny, when we had this conversation, it was like 1,200.
Well, that's the thing. You can make as many as you want. You want. There's no regulation. There's no rule to say, who can make it or who can't. Like anybody can do it. And so that unregulated nature just creates, and money's flowing into it. So the capital keeps growing. I mean, the value, the marketplace keeps growing. But even still, I think Bitcoin is nowhere near close than the whole market cap of just the Apple stock, of just Apple's market cap. So there's a lot of room to grow in the space. And I think even in that Fidelity article, they talk about the potential growth of the space. So growth means opportunity, right?
I like to look at companies, and I'm just thinking through this and say, all right, so they want to diversify some of their money out of the dollar as a hedge. So now thinking macroeconomically, which is one of the things that we principles of prosperity, how do I apply this to my personal economy is what's going off in my head right now. And so how would they apply that? So let's take that on a smaller scale for the listeners out there. What is that mean to them, that Square and Goldman is saying have 5% of your portfolio? How would they begin to do that?
Fidelity. But
Fidelity,
how,
sorry.
I mean, I'm not sure if you can do it. Well, I know you can buy Bitcoin on Square, you can actually hold it. You want to like so crypto is different in fact. Like there's a wallet that actually stores your cryptocurrency. So if you're buying Bitcoin or any type of crypto and you don't actually have a wallet that's yours, not like it's not a physical wallet but a digital wallet, then you don't actually own the crypto. You own a derivative of it, which is like when you're buying it on, like, let's say Robinhood or whatever the case may be. But Square, there's a wallet, so you're only, you can buy cryptocurrency. The only thing I don't know is you could set up a automatic buys of it. So I know on Coinbase, so I tell a lot of people, go to Coinbase, set up an account, and just set up a reoccurring purchase. I like to tell people to do it weekly because of the fluctuations in the market price. You can catch some of your dollar cost averaging by taking a little bit of money every week or every month, but you can catch some of the price fluctuations of the underlying asset, Bitcoin, Ethereum, whatever, and just build up a portfolio, set and forget it. Like, I know for me, when it comes to like saving money or stuff like that, if I can make it automatic, and it's way more guaranteed it's going to happen than if I got to make a decision and say, let me go ahead and say, like, yeah, I've gotten better over time at doing it, but automatic is way easier. So if I can just set and forget, whatever your disposable income is, whatever kind of excess cash flow. So if I can take, 5% of my money, 10%, and then I do that, but then I also do other things. Like one of the things I've started doing in this year is, my credit card points. Instead of taking those credit card points and buying stuff, I just buy Bitcoin, turn it into Bitcoin. Or, if I see opportunities in the market, I will now, like, watch out to extreme days, I'll take that time to buy cryptocurrency. So just strategic, but also keep growing my portfolio, my exposure on a consistent basis without thinking about it, but also still taking other opportunities when I can to take advantage. But then also trading, and then trying to identify different ways in the crypto space where you can make money from just parking your crypto at different spaces. And more and more of those are coming up every day. And so right now I probably have about, let's say, 5 different strategies going on where they are, producing crypto returns where I can turn those into cash if I want, or just leave them as cryptocurrencies sitting wherever they're sitting. So that's
Give me an example of that. Because we're big on cash flow here at the Practical Wealth. And so that's exciting, whereas you can extract that, go to the beach when you're later to get out the house, but enjoy some lifestyle generated from these assets. How would you look at that?
Here's one has become really popular in the crypto space recently. It's called yield farming. And yield farming, what that is basically parking your crypto investment somewhere in a smart contract, receiving, let's say, interest or some type of rewards for doing that, but then also receiving a token that is produced because you have parked your crypto in a smart contract, and that token also has value. So here's an example. So in the last probably like 6 months in crypto, you have decentralized finance, or DeFi, which is like taking over the space. Like billions of dollars have gone into the space as far as transactions and just developments that have come up like overnight. And so then you also have what's called a part of decentralized finance means like there's nobody in control of anything. Everything's smart contracts. So you have a exchange, like most exchanges, there's like there's a middleman that connects the buyer and the seller, and there's market makers. Well, and this exchange is the biggest exchange by volume right now is Uniswap. Uniswap is a automatic exchange. I mean, it's all smart contracts. There's no like middleman, there's no market makers. So, but where does the money come from to make these transactions happen? Well, they're called liquidity pools. So you have to, let's say you take some Ethereum, and then you have to take a stable coin, which a stable coin is just a cryptocurrency that's like tagged to like the US dollar or some type of other traditional asset currency, but most are tagged to the US dollar. So you take a stable coin like USDC, and let's say if you had $100 worth of USDC, you would need to take $100 worth of Ethereum, deposit into a smart contract. And for doing that, you get a liquidity pool token. Well, that liquidity pool token gives you access to a percentage of all the transactions that happen in Uniswap. Like a really small percent, but it depends on how much money you put in, that can get higher. But you get rewarded an LP token. Well, now you take that LP token that you're rewarded and you throw that into another smart contract. And by locking in that smart contract, you're rewarded uni tokens. Well, right now, a uni token is like $3.20. So all you did was lock yourself in contracts, and now you're getting rewarded on both sides. It just depends on how much money you put into those contracts will determine how big your rewards are. And because there's liquidity behind both of these assets, like I said, Uniswap is they're trading billions of dollars in volume right now, as far as more volume than some of the more popular exchanges like Coinbase. I think they may be doing more than Binance. I'm not 100% sure, but definitely more than Coinbase now on a daily volume, which was like Coinbase was like king for a while. And then getting these rewards just created money out of thin air. So that's one example. Another example, real quick, is just having a certain amount of cryptocurrency. Let's say you have, I don't know, 5,000 of a certain, I'll say Tezos for like better. So Tezos is just a different type of smart contract cryptocurrency where you can lock up your Tezos, and it's called, you receive with a baker, and you can delegate your Tezos to a baker all off of a hardware wallet or a digital wallet, and you get rewarded Tezos rewards every 3 days, like at least 6% of the supply, I think every 3 days. So now you are just receiving rewards that Tezos has like over, I want to say like $100 million of daily liquidity. Well, wow. You have no problem cashing your Tezos if you wanted to do that. So it's like, and that's just a couple of, I mean, there's a lot of different ways you could do that. So it's not just like buy and hold or trading or whatever. They're constantly coming up with just like techniques that they're trying to like just move away from anything that has to do with traditional, like, oh, I need to go to the bank and apply for this to get this loan. Oh, I need somebody to help me, allow me to set up a bank account, or, oh, I need somebody to, pay me interest. Like they're trying to get rid of all that via smart contracts and just code, basically.
Yeah. So y'all got to be aware of this. Like, so there's, we always say on the show, there's a lot of ways to skin a cat. What's the price? Knowledge that he's found out to figure out how to do all this kind of stuff. So mindset, skill set. So this is a skill set. And then networking. So I'm always going to bring that theme back to you, so you'll stop asking, so let's do a quick thing. So now when you hear, we're both not huge fan of these, we won't name any names, but we both are on a lot of people's lists. So people call us about, and I actually we both like network marketing, but, I'm very particular as to the service I like network marketing to be in, or the product, right? And so how do you feel about this? Is a great industry, a great market to be in, and a growing market. So anytime you find that, you're going to find people that want to recruit, build a MLM out of it. But I always feel, correct me if I'm wrong, this is my gut feeling, is that the people that are joining it are just looking for another thing, but they don't know, and they're not being taught what you are learning, right? They'll get into this or Forex, and then they say, well, we don't have to know anything. We're just trading and following the trades of the experts.
One of the things I wanted to have, so speaking to that last point, is just one of the things I wanted to have, and I talked to some people about this when I was able to meet some of the guys that I've been learning from, and I met them in Amsterdam. Like I was telling one of the main guys, like one of the things I wanted to have and what I was concerned about was just independent thought. Like I wanted to be able to create money with my mind from being able to look at it, not having to rely on somebody else. So that was my main thing. And I needed the knowledge. When it comes to a lot of these these MLMs that are piggybacked onto crypto, they're like the first one I saw, it was like, at the time, like Bitcoin, they were charging like $1,000 more for Bitcoin than it was actually trading at. And I didn't understand, like, why would I do that? I could just go to the exchange or wherever and buy it at it cheaper than that. And in this space, like I don't see a problem with like affiliate marketing and stuff like that, but there's no real need for MLM in this space, because you don't have to do it. Like, I'm not sure what the value is in that, because I'm going to be taking time. Most MLMs, they want you to pay like a monthly fee to be a part of, which a lot of businesses, that's their business. I pay a monthly fee, but if I'm paying a monthly fee, I feel like you can get better value in other locations. And I just, MLM, I found, like, don't get me wrong, like my foundational thinking of how I, kind of grew a lot of that came through MLM because I had one of the best skills that I've developed two of the best skills I developed from MLM was one, working without developing a strong work ethic without getting paid. Like, not to say I didn't make money, but I didn't, you're not working, you're not getting exchanging
a check every Friday. Right. Exactly.
Right. So I had to, like Sunday nights, I got in a habit of working really hard on a Sunday night, which, but at one point it was like sacred. You don't do it there on Sunday, blah, blah, blah. But now I'm working. And then also the strategy of the skill of personal development. Like, it was such a push to personal development. So as a younger person, not really be aware of this type of stuff and kind of laughing at it at that age, but doing it. So going
Right.
years of listening to tapes of a lot of business philosophy on your car,
right,
CDs in your car, read books. So, and that guided me a lot and helped me going forward. But as far as like, I kind of feel like, and I could be wrong, I know there's people still making money from it. So, but I kind of feel like MLM is like is kind of an outdated business model because of like social media, because of just all the different tools that are available out there nowadays. I don't know if it just doesn't have, to me, the same impact where you could do kind of the same things with affiliate links, and just, if you want to be in that space, like just being an internet marketer and stuff like that. Like, I don't know if it's really beneficial, and like the skills that you have, like you have those skills, like the skills I've learned in crypto by investing in myself and reading, researching, videos, trainings, whatever, that they apply to other asset classes. All it is the same thing. It's just a different, like crypto, stocks, commodities.
Right.
They're all things that
business is business, right? Yeah, and so that they overlap. I think network marketing is affiliate marketing, right? And so, and the challenge with that, not to go ahead, because I'm going to do a whole show on this, is that people still try to do the business like it's 1989, you know what I mean? And in the world where we've had the internet since the early 2000s, a lot of times the marketing tactic hasn't changed, or people think that internet marketing is spamming your friends on Facebook. Come look at my thing. They haven't asked you to look at your thing, but you're messing, or you taking a picture in front of a Bentley or something. Hey,
and I think the thing about marketing now, internet marketing, like I'm not like, that's like not my strongest area of marketing, but what I know that keeps people and brings people in is, of course, you always got to dangle the shiny thing out initially, but value, like how are you creating value and providing value to that person, as far as like information, things, beneficial things, like helping that person improve their value of life. And if you're able to do that, then you can keep somebody engaged. But like the other, like you said, a lot of that older, the way they were doing things, it doesn't fit my lifestyle.
Right. And yes, everything is not for everybody. Money follows value. So to that point, because I think that hopefully you can hear from this, there's opportunity there, but you've got to know some stuff. And so you can't be lazy. You've got to mentally lazy about, getting in. If you want to make some money, you can't make money by not knowing what the hell is going on. One reason I wanted to reach back out to Kamil, because I had posted on Facebook with friends. He's one of my clients on Facebook, and he said, hey, I just finished a course. So I want you to tell me a little bit about, so what happens is if you want to begin to learn this stuff, he's kind of taken some time to build and record a course, and you can hear he's done a tremendous amount of research. Think about taking this and what they're going to, what are some of the foundational things they're going to learn, and how will them carry them forward into this class.
So the course is called the Crypto Craft Blueprint for Crypto Profits, and it's a A to Z on like getting started. Then once you get it started, like where to get started, well, the history of crypto, the crypto space, Bitcoin, where the different, like, I guess algorithms of how it works, but not like getting too technical with it, just some like overviews. Also like security, like because crypto is the wild west, you have to have a security strategy or you will get scammed or get hacked and lose. So going into security, how do you protect your assets? Where can you go to buy crypto? Some of these passive income strategies. Also talk about a little bit about mindset and the different types of trading. How can you research coins, like where to go where you could research different cryptocurrencies, know some of the tokenomics about how stuff works. see how you can kind of identify some opportunities in the crypto space, how you can do research, how you can be a part of communities. I mean, I kind of went over just a lot. Like, I mean, I don't know if you've ever seen this, have you ever seen the movie Old School where or
Yeah.
Will Ferrell is he's supposed to debate against that guy on the guy who was like a famous debater. I forget the guy's name, and so they asked this like real technical, detailed political question, and the guy went to speak, and Will Ferrell was like, "Hold no, let me take this one." And the guy looked at him like, "Are you sure?" So he just like blacked out. He came with all this like knowledge, and everybody's looking like, "Where did you get this?" And then he just shakes his head like, "Oh my God, what happened? I blacked out." I kind of feel like that's what happened when I did this course. Like, when I go back, I was like, I don't know where I got this stuff from, but I mean, it was like, it's there, but I'm like, damn, I wrote this. I mean, I literally wrote out. It's not, if you want to read it, you can read it, because I broke it down in so many chapters. You can read it, you can listen to it. There's visuals as far as videos that for every section, so you can go about it however you want to go about it. But and I wanted to be as like something I would want if I was getting into the space. And it's a foundational course that if you're like a beginner, new to it, great. If you're somebody who's been in the space for some time now, it may be a nugget or two in there that can help you, take your whatever you're doing in crypto a different way, or just have a different perspective of where opportunities may be or how you're doing things. And so, like, crypto, there's a lot of noise, and that's one of the challenges. There's just so much, like every day. Like in crypto, like a friend of mine reached out to me and said, I forget exactly what it was, like Square or somebody just did something with crypto. And it's not the Square thing that they put the money, but it was something else. And I was like, man, well, that was like 3 weeks ago. And then crypto, that's like forever. Like it moves so fast. It's like I said, it's a 24-hour space. People are constantly developing different things, and it's so much. So how do you get rid of the noise? How do you, know where you should be focusing your time, and kind of get into all those different things, good news sources, where to get good information about crypto, how to track your portfolios. All these little things are in the course to help somebody take their understanding of cryptocurrency and how it works to another level, from going to somebody who has no knowledge to being a point where I can say, like, like a business associate of ours, so you'll definitely be more than just cocktail party smart after you go through this.
Right. Okay.
I
forgot that phrase, cocktail party smart. That's right.
You'll have a good understanding, and you can move in the space now. Like you don't have to be scared anymore or have fear of what's going on. You can definitely move, take advantage of the opportunity that's out there. I mean, even if it's just to learn how to set up a dollar cost averaging, or even how to position yourself on a trading platform to be able to position yourself ahead of a washout without even being in front of your computer or your phone. Like, you just how to position yourself to do that automatically. Like little stuff like that is all in there. I mean, I put like a lot of time into it because I wanted to do it. I saw other people doing it, not courses on crypto, but just doing courses. I was like, oh, I think I could do a course. And then I think December, one of my best friends every year has I forget, he calls it a re-Christmas, where basically it started off, used to be like 5 or 6 of his old friends from like we were younger. He would come, we just hang out after Christmas, but then it got big, 30, 40 people. Then it got small, more like serious minded people. But last Christmas, I think I talked for like an hour about, because the guy we got into the gold crypto, and I'm not like, you have to be in gold, you have to be all in on gold, I believe you need exposure to all different asset classes. Like, there's no one best one, but get an understanding of it. Maybe you like one more than other. But anyway, right. Got into this long conversation. But I wound up talking for like an hour, and my friend wasn't even in the room. But afterwards, I think the next day he called. He was like, "Yo, you gave like a 1 hour master class on cryptocurrency. You should probably do a course." And I was like, yeah, but that was right before tax season. But I wasn't thinking of that. I thought about it. I was like, I ain't gonna have time though. But then COVID hit, so structure of life changed, so had a lot more time. And I'm not that type of person that's just gonna sit around and do nothing. So I need something. Right. To keep
you weren't binge watching the Ozarks. You weren't doing. That's good stuff. Yeah, I let me ask you. As you're saying, I was thinking that you think it's a course that if I've got kids 17, 18, in college, high school, you think they would get something out of the course. I think it's definitely this is their world.
Well, one one of my friends, he helped somebody, a younger person, like I guess the guy's like, I don't know the guy, but some of the guys like 19 or 20. And now the guy helped buy the course, and he's been trading, investing in crypto. And I think not only does he have a crypto portfolio now, he has a stock portfolio. I mean, I don't have anything to do with that, but he's in the space now. So, and he's making moves. So I definitely, it's for anybody. I don't think it's like, I didn't write it where it's not written or it's not going over. It's like you have to have this super technical background, because most of the people in crypto, they're like, you do have some really tech smart people, but you also have people who aren't tech smart. There's the gambit of the demographic of the people in there is all over the place. So a young person, yes, can grasp these concepts. Like they're not super hard. Plus, I know people, they learn different ways. So we got visual, audio, or reading, whatever. So it's all in there. And if you don't, I know for me, like when I take a course, like I'll go through the course and it's like sometimes I got to go back and if it's a video, then I can go back and I'm gonna watch it over and over. And it may take me watching it like the same video segment like 10 or 15 times before I fully grasp it.
Yep.
But that's available for you if you want to do it in that form or fashion.
That's good stuff. So we'll put where can they go? We'll also put a link in the show notes too, if they want to check out what you're doing.
So
go get to get the course.
The website is thecryptocraft.fyi/course. So thecryptocraft.fyi/course, or you can go to thecryptocraft.com and there's a link in there that's the Facebook business page. You can go, there's a link directly to the course. And then I know, Curtis, you're going to link up the show notes of where they can go. So they can go, via the link on your show notes. And so those are the places you can check the course out.
That's good stuff. So guys, this is a bigger conversation, but I wanted to give you, the goal of today was to kind of give you, I always tell there's a lot of ways to skin a cat. There's 4 asset classes: business, real estate, paper, and commodity. So I would put this under paper. It's more electronic, but it's not real estate, it's not a business, and it's not like oil and gas. So I will put it under paper, but there's opportunity there. And you need to, like, y'all are basically, I always used to say, so you're the CEO of your life. So you're kind of running your own hedge fund, right? So what do you do with your capital to, one of the things Kamil's always concerned about, making his money always make money, right? You don't want to have lazy assets, right? And so get off your lazy assets. So anyway, listen, he's got a lot of stuff to do today, and I thank you for making your second appearance on the Practical Wealth Show, dropping some science on our listeners. Folks, go out there and get his course. Kamil, thanks again for being on the Practical Wealth Show.
Thanks for having me, and thanks for all that you do, Curtis.
I try. All right. Have a great day.
Thanks for listening to Practical Wealth. To access the show notes and resources, go to practicalwealthshow.com. To get your questions on the show, go to practicalwealthshow.com. This show is for entertainment purposes only. Before you make any investment decisions, consult a professional. This show is copyrighted by Practical Wealth. Written permission